It's been an uncomfortable fortnight for a government trying to bed down the budget, particularly around the fairness of contributions from the wealthy and less privileged. Well, Ross Garnaut, Professor of Economics at the ANU and author of the Rudd Government's Climate Change Review, has now weighed into the debate. I caught up with him a short time ago. Professor Ross Garnaut, welcome to the programme.
Hello, Tiki.
Now, in the last week, you've put forward a solution for Tony Abbott and his budget, and that is to keep the carbon tax. How would that play out?
Oh, that would be a very simple matter, Tiki. You don't have to do anything. Just don't repeal the carbon laws, and that adds around about $6 billion to the bottom line for next year. Less, but still a few $1 billion after that, because we're due to link with Europe at the end of the financial year. But there's still a few billion a year in it, and it's a good source of revenue, relatively undistorting, has less effect in damaging economic activity than alternative forms of tax. So just as a fiscal measure, quite apart from the fact that it does the right thing on Australia making a contribution to global climate change.
As you say, that number is coming down as we connect with Europe, if we connect with Europe. But isn't a lot of that money that's been raised already allocated to things like household assistance and indeed industry?
Well, the industry bit comes down automatically with the link to Europe, and some of the industry part was lump sums at the beginning. The payments to generators, they don't continue. The household tax cuts and social security adjustments continue. But Tony Abbott, the Prime Minister, promised to continue those, and they're all in the budget, even without any carbon price. And one of the reasons there's a special squeeze on the budget in the year ahead, and the couple of years that follow that, is the government kept all those tax cuts and social security adjustments while trying to abolish the revenue that was going to pay for it. Mm. So that's in the budget, whether we keep the carbon pricing or not. If we don't keep carbon pricing, we've got to take a lot of money out of other things.
Going to Europe now, because if the carbon price were to stay, come July, we will be then trading and connected to Europe. I'm just looking at what the price has done in Europe. We've now got the mothballing of not just coal-fired power stations, but gas-fired power stations. Is that the right way to go?
Well, I think there's a very good political reason for linking to Europe, and that is that Australia having a carbon price higher than Europe was the focus of a lot of criticism. By linking to Europe, then our price stays relatively low until global economic conditions tighten, until the European carbon policy tightens, so that we would be rising later on at the same time as the rest of the world was doing more.
I guess what I'm saying is that the price has been so low in Europe, it's actually driven the mothballing of not just coal-fired power stations, but gas-fired power stations. Is this the way that we want to be going?
I think it puts in place the carbon pricing, a price signal, just as price signal in consumer areas of the economy makes people conscious of choices. Having the price signal would mean that business contemplating new investments will take into account at some time in the future the carbon price will be higher, so they better not build in big carbon commitments in future. It does quite a lot of good. Of course, it doesn't drive as much change as a higher carbon price, but it's still a very positive thing.
One would think that the Prime Minister is unlikely to change his mind on the carbon tax, but moving to bigger challenges, and I'm just...
Of course, Tiki, he's unlikely to change his mind on any budget measures, but these things will be determined by the minorities in the Senate.
Yes, but presumably Clive Palmer's party would potentially be rolling on their position on the carbon tax, you'd think?
I wouldn't like to speculate on that. I think that Mr. Palmer has said that he shouldn't be taken for granted on anything, and I'd take him at his word.
Aside from the carbon tax, there are other major challenges that the budget is wrestling with, in particular these huge spending commitments that Labour had both on NDIS and on education in a climate of falling corporate revenues and very little mining tax. How would you deal with pulling those spending lines in beyond the estimates?
Oh, I think it's a big challenge for Australia, Tiki. It's the challenge that I outlined in my book, Dog Days. I talked to you about that late last year, and it was going to be a challenge, whoever formed the government. The really big structural things that have to be done should include a balance of tax measures and expenditure measures. In the case of both, you need to give a lot of care, a lot of careful work to exactly how you go about them. You won't get permanent structural change in either the tax system or the expenditure system that sticks unless you've brought into the discussion all of the expert parties that can see consequences further out. And so I think first the community has to be brought into the challenge. The community needs to be much better aware than it is now that we've got a big long-term challenge. Everything has to be honestly on the table. There are lots of parts of the tax system that have been loosened up, a lot of money given away during the boom that we couldn't afford. Some parts of that loosening we could tighten up and would actually improve the rest of the economy. Keeping carbon pricing is one of those, of course, and then put everything on the table at the same time, tax and the big expenditure programs. Expenditure programs look carefully at all of their implications, recognising that this is a really big challenge for our society. There's going to be no quick fix for this, but I think we can do it over a number of years.
Expenditure has been looked at more than tax in this particular budget, and you've been very critical of the way former Treasurer Wayne Swan ignored much of the Henry Review. Do you think that much is going to come of the next tax paper that's going to be written?
Oh, well, I hope there's a broader base of participation in analysis than there was for the Audit Committee on expenditure. These are complex areas. There are effects on society beyond business, beyond the budget bottom line, and we won't get a lasting solution unless we bring in the expertise that can look broadly at these questions.
But do you think, for example, that the government's push onto the states of say this $80 billion as far as hospitals and education is concerned, do you think that's pushing the agenda onto tax appropriately?
I think that there has to be a big reform of federal financial relations. I devoted half a chapter to this in Dog Days. We do have a dysfunctional federation. There has to be big change, but I wouldn't start the conversation by dropping an atom bomb onto the states like the government did in its budget. Just a fortnight before that, the Prime Minister was sitting down with the premiers. He signed the premiers up to a long-term review of federal-state relations. I think go back to that review, get everyone talking about the dysfunctional nature of the federation, and work through it from there. The solution will have to be a redrawing of the boundaries between Commonwealth state and state expenditure. It should include attempts to bring states' own revenue, or at least revenue to which they're entitled as right, closer to their expenditure commitments. It will require some adjustment of the tax mix, and this isn't going to work in our federation unless at least a few of the states are supportive of it.
And what about the mining tax? Do you see that? I mean, is there any way to see that as anything other than a complete failure, really?
Well, if it was kept in place, the existing tax, then in a few years when the transitional deductions are worked off, it would start to work as it should. But as far as I'm concerned, the big problem of public policy for the mining tax was the way it didn't negotiate the interface with the states with their royalty responsibilities, and I don't think that you can get an efficient mining tax without it being part of the review of federal-state financial relations.
Let me move to China, because you've been looking at China in great detail recently, and in particular the new economic model for growth in China.
Yes, China's a very important stage of its development, a very challenging one, just as challenging as ours in its way. The period of investment-led growth, very intensive in metals and energy consumption, ended in 2011, and the end of that period of Chinese growth marked the end of our resources boom. Since then, iron ore, coal prices are turning down. The growth of thermal electricity generation has slowed dramatically and is about to stop. So these are all structural changes that China has to make. They'll either make them smoothly, in which case the decline in demand for imported coal will be balanced by strong growth in demand for other things, high-value consumer goods, including agricultural products, services, or else China will find it hard to implement the reforms, run into trouble, and will have a period of bumpy growth, in which case it wouldn't be so good for the alternative industries.
What do you think is more likely at the moment? Because, of course, there's a lot of implications for Australia, both on the coal side and presumably gas as well.
If the reforms succeed or fail in China, it will show up the huge overinvestment, wasteful investment in Australian coal mining since 2011. That's going to happen either way. If it's a bumpy landing in China, it might be a bit worse for a while. On the high-value consumer goods, services, agricultural products, specialised manufactures, I think the odds are that China will succeed in its transition to a new model of growth, and those industries will get a good lift in Australia if we manage to get down our real exchange rate, which makes everything uncompetitive at the moment. But one has to recognise that this is really hard. There are risks, and we can't be sure of a smooth transition.
One of the big risks, according to some observers, is China's housing market, which is bubbling away. What do you think they will do for the housing market? Do you think they'll let it hopefully self-correct, or will there be some level of intervention?
I think that success of the reforms means tightening up prudential regulation of lending, which will affect lending to housing. There will be a pullback in housing. That's just part of successful reform, Tikki. So there of course will be a reduced demand for steel, for associated inputs of energy, but that's just part of the adjustment that has to be made. Now, it's very hard to judge these episodes of tightening money and pulling back. You can make misjudgments. The authorities can misjudge, in which case it could be bumpier still for a while.
And just on China and energy, of course, there's been this very important deal with the Russians. How significant do you see that contract?
Very significant, Tikki, but it's not really a new development. East Asian gas prices are way above the rest of the world, and European prices much lower than East Asian prices. US gas prices artificially low. Australian export gas prices artificially high because of the high prices in East Asia. These big differentials across the world are not sustainable. Foreign trade is bound to break them down so that you get lowering of export prices in Australia, raising prices in the United States, eventually raising prices in Europe, lowering them in East Asia, as markets do what markets do. Arbitrage gradually reduces differentials. A lot of Russian gas going into East Asia is just part of that story. We shouldn't see it as a new story.
But Vladimir Putin probably got quite a good price in hindsight.
Well, from the reports, about 2/3 of the export price of Australian producers to East Asia in recent contracts, and that's where the market's headed.
Finally, Ross Garnaut, our position on the Australian dollar, is there anything we can do about how stubborn it's behaving, or are there forces beyond our control in Australia?
Well, we've chosen not to do the things we could have done. We do have a housing boom that is a constraint on monetary policy, but there are things we could have done that without putting a constraint on monetary policy. I suggested in dog days a change in prudential capital requirements for housing. At the moment, housing is privileged over other business lending. Remove that privilege, have a look at negative gearing, and that would allow us to give the rest of the economy the fall in interest rates and the fall in the exchange rate it needs. But if we don't do anything about housing, we've got to keep interest rates where they are. That'll keep the dollar where it is, and everything in the export sector other than very big mines will be uncompetitive.
Professor Ross Garnaut, it's very good to talk to you. Thank you.
Good, Tiggy. Bye.